Okay, good afternoon, everyone. BC Richfield here, coming to you live from London and on behalf of HyroTrader. It's really wonderful to be here with you guys. I was supposed to be joining, or should I say hijacking, Bast's show again today. Unfortunately, he's a little bit under the weather, being, I think, working hard and playing hard. So I'm going to try and fill in for the legend himself. If you do have any questions throughout the show, please don't hesitate to pop them in the comments and I'll take a look. And now the idea of today's show is I'm going to run through with you guys, as I have previously with other trading teams that I've been part of. I'm going to give you a little quick introduction to myself in case you weren't able to make the show last week. And then we're going to just look at some of the key news catalysts facing the market this week as well, which is super, super important at the moment. As you can see, we're in a very, very news or fundamentally driven market. So we want to be aware of what those catalysts are. We have things like CPI this week, for example. The next thing I want to take a very quick look at are inflows and outflows. You can see there's been a significant difference in that as we move forward. So that's always something that's worth keeping an eye on with crypto. I then want to do something slightly different. I know I've known Bast for a long, long time. We were on trading teams together sort of 4 or 5 years ago. But I like to cover traditional markets as well. Looking at it a little bit more so, you can probably see from my menu up here, we've got the NASDAQ, the S&P 500, DXY up there as well. And that's because I want to get a sentiment for risk, okay, for the market's appetite for risk. Now, I'm predominantly an intraday trader. We will absolutely take a look at charts on the higher time frames as well. And if there are any particular tickers or anything you want me to take a look at, then please do let me know. But apart from that, I thought I could spend just a little bit of time going over some charts with you guys and also looking at my strategy, the setups that I'm looking for today as well. AFAC, HBAR, awesome. Yeah, overall outlook, BTC, we can absolutely copy that. Hamza, hello, my friend, and welcome. Where is Bast? He's just recovering a bit, mate. I think, you know, Miami, all the amazing things going on at HyroTrader at the moment. I think we've burnt him out a little bit. So I'm just jumping in so he can get a little bit of rest. All right, guys. So what I'm going to do, yeah, exactly, Miami, indeed, NZN. Hyro is everywhere, my friend. We have such a wonderful presence all over the world. But yeah, Hyro just spent some time, obviously Samuel Bast out there in Miami making connections and just doing some really, really wonderful work. So I'm sure you guys will all be updated on that soon. I think there's also some stuff you can go and check out on the socials if that's of interest as well. So one of the things that I want to just cover first of all right, before we go much further, is I want to take a look at what we've got going on in traditional markets. All right. Now, I know that a lot of people within crypto are very, very crypto focused. One of the risks that we always kind of come across if we don't take into account traditional market risk appetite is that you can end up trading into some really, really high impact news. All right. Elias, Hassan, hey, everyone. Apologies if I miss anything in the comments. Don't hesitate to ask again. I will kind of look through them as we go. Right. So as we're looking here, let me just ping this up for you guys. Right, so this is Forex Factory. You know, there's trading economics. There's a lot of different free calendars you can get. But the core information on here is filtered by red folder. All right, that just means that as we can see down here, this is the highest impact news. So Forex Factory is just a completely free site. There's no affiliation between them, myself, or HyroTrader. It's just purely what we're looking at in terms of upcoming news events. It's filtered by a red folder, meaning that it's the highest impact news. And what we can see at the moment is obviously we're Tuesday, 10th of March today. Our focus is always on the US markets. And the reason for that is they're the biggest market in the world. The dollar is the world's reserve currency, right? So it has the furthest reaching impact on other markets. So what we're looking for here is moving into Wednesday is core CPI, CPI month on month, and CPI year on year. With Forex Factory, you can see what the previous prints were over here. The whole point of this is the consumer price index is looking at, you know, the cost of living being passed on to the consumer, right? If the consumer has less money in their pocket, if life is a bit of a tighter squeeze, they're less likely to be speculative with that money and a lot less likely to have money to invest that can put a squeeze onto risk markets. MJ, hello mate, Jason from London, and thank you, Fred. Yeah, Bast unfortunately a little bit unwell today, so I'm going to slide my way in there and see what we can do. Now, Thursday is really important. Unemployment claims. This has been a really sticky point in the market as of late, okay, because the Fed, if we're seeing unemployment claims rise and job openings lower, right, you think, look at things like NFP, right, non-farm payroll, then the issue with that is, it's, or not the issue, the good thing with that for risk markets is it makes it more likely that the Fed are going to cut rates. If you're cutting rates, if you're in an easing environment, right, then you're more likely to see a pump in risk. And that's normally very positive for risk assets, especially like Bitcoin and cryptocurrency. Moving through onto Friday, again, unemployment is the theme. We've got unemployment change over in Canada and unemployment rate. But the most important, our real focus is obviously on the US here. We've got PCE price index, all right, and preliminary GDP. So again, showing the growth within the country, showing how we're kind of setting up from a point of stability in the US, all right? Now, for all of this that's been said, at the moment, this is all very secondary to the unfortunate escalations that we see taking place in the Middle East, all right, between US, its allies, and Iran. While that goes on, and while we're seeing the issue that we're seeing with oil, all right, we want to take a very quick look at that at the moment. We just want to be aware of it. All right, I'm not turning this into a politics show. All right, I'm looking at this purely from a market perspective. And if I want to take a look at something like crude, for example, we've had a nice pullback on crude oil at the moment. However, what you can see here is if we lay BTC over the top of this, yeah, we can see quite clearly that, as soon as we've started to find strength in here, it's been really, really, really difficult for Bitcoin. Yesterday was a really nice day, but we can see, as we've started the week here, this pullback in oil, which I believe is, ultimately, if we look at the rhetoric coming out of the White House, they were talking about the idea that Trump was saying he thinks this war is going to be over very, very quickly. All right. And in fact, even gone ahead of the 4-week plan. Ambitious plan, I think, anyway. But ultimately, if we really, really want to see de-escalation over there, then that's typically going to reflect in the oil prices. All right. Now, when I took my job at the very first fund, a proprietary desk over in Germany, one of the things that was taught to me that I still hold true today is if you look at oil has the ability to move markets, right, and regimes. Oil is something that can be weaponized, where if we look at gold is a much more reactionary asset, meaning that, if all of a sudden oil starts to rip for whatever the catalyst, it's going to put pressure on industry, it's going to put pressure on risk markets. Gold, on the other hand, is typically reacting to the geopolitical pressures. All right. So if we take a look at something like gold, we can see gold pretty flat at the moment, kind of spiked up, but then we're kind of ranging along at the moment. Let me just get rid of BTC on here. All right. The other thing that I always look at is the DXY, right? So this is the dollar index. This is the basket of currencies, against the dollar that's slightly heaviest weighted towards the euro. Now, I break this down into ranges. Now, the correlation for this has been slightly trickier, all right, especially this year, or more so since Trump got in the White House, because there's numerous catalysts that are affecting the dollar. However, what we can see here is the dollar's just kind of stuck up here in this range, all right? Now, typically a weak to stable dollar is good for risk markets, but we have seen a swing in and out of that correlation, all right? But while this is steady, it's giving the market a little bit of room to breathe. We can see that it's kind of heading down, taking the pressure off. And one of the most important things that I look for here is the VIX, which is the volatility index. Now, one of the easiest ways to kind of think about this is, first of all, for risk assets to thrive, we like to see the VIX below 20, and ideally kind of trending down if you're using a lower time frame. However, when we're looking at this spike up, the best way to think about this is looking at people, it's basically put activity on the S&P 500, right? So it's people opening short positions on the S&P 500, which is, ultimately Bitcoin, cryptocurrency is pretty linked with the indices. Again, you have a swing in and out of correlation. However, we can see when we have these large spikes up, and what you can do is move this down onto something like a line chart, and we can do the same again. We can overlay Bitcoin on a new price scale here, right? And you can see the counter correlation here, right? As the VIX really starts to rip higher, look at the pressure that Bitcoin came under. As the VIX starts to drop down again, we come back down below the 30 level here, and we're on a downward trajectory. We can see that impetus. We can see Bitcoin start to pick up a little bit more as well. So hopefully that gives you guys just a little brief overview of what I'm looking at in terms of how we use legacy markets to paint that initial picture for risk. Now, like I said, I'm predominantly an intraday trader, so I'm going to run you through my setups and what I'm looking to trade today. But what we are also going to do is take a look at some tickers that you guys are interested in as well. Let me just have a quick look at the comments, guys, because let's have a look. Gas up 30 cents. Richfield got in. I did snuck in there. Absolutely stole this one out of Bast. Yeah, it could be a volatile week ahead. Liquidated my account. So yes, yeah. I mean, look, obviously using risk stuff like that, sometimes it does happen. You do get these cascades and that can take you out as well. Yeah, Fred's got a good point here. I think, headlines move markets and reality just dumps it. But yeah, ultimately most catalysts are coming from news events, but we do see that transpire in the price action, which is, certainly a big part of how I look to trade. Yeah, anyways, it seems that sanity returns back to the US now. Yeah, we'll see. All right, we'll absolutely see. Discuss why USDT DOM is always opposite to BTC, because it's the denominator, right? So like in any kind of pairing that you have, if for example, if you look at traditional markets, you've got the euro versus the dollar. If the dollar is particularly strong, then the euro is going to really suffer, and that's going to work the same across all different currency pairs, like whether you're euro, whether you're dollar JPY, whether you're dollar CAD, whether you're cable being the British pound against the US dollar. So that's why you're kind of seeing that on the different side of that in terms of correlation. All right. Morning, guys. Morning. Yeah, and Hassan makes a good point. Hassan Abdullah here as well, just going out from risky assets, going into stable. So it's looking at it more as like a little bit of a flow. One thing I did want to just share with you guys before we jump into the charts here is also looking at this, right? Now, as we're looking at this here, we're looking at net inflows and outflows, right? So you can see in here, obviously, it's the outflows are denominated as a negative figure. We can see yesterday the inflows coming in, all right? So total across here now, 167.1 million. We can see the pressure coming onto the market previously as well, right? So it's just interesting to note as well, look, total net inflows, 55.9 billion, all right? That's 703,000 Bitcoin. So you got to ask yourself the question when you're in a situation like this is who is buying? Typically retail make up a very small portion of any market. So, when we're looking at that, you're talking about some form of institutional involvement, okay? So ultimately, what am I trying to decant this down into? Well, my job is to first of all work out a bias. Yeah, where is the market pulling towards? Is the market rewarding buyers or is it rewarding sellers? And then I need to identify key levels to trade from. All right. MJ, Max Trades, love your vibe, buddy. Thank you, mate. BC, do you have several sales in intraday trading or just one sale for life? I like that one sale for life. No, many different many different systems across different markets, right? So different markets react very differently. I made a lot of my career in Forex, for example, which is a very heavily ranging market. When I first came across to cryptocurrency, probably about 7 years ago, was just this amazing, wild, high volatility market that was just crazy to intraday trade, which is why I started focusing on that. But predominantly in my career, I've been an equities trader. That's who I traded for at Neue Capital, which was a proprietary fund based over in Germany. And we also opened the crypto desk as well over there, which is how I started to get exposure to that previously. Forex and crypto is an interesting one, Max, because Forex is very, very clean, right? So you look at Forex in terms of support and resistance flips, ultimately crypto, as much as we all love it, is still a pretty illiquid asset class. All right. So if you go to traditional markets, if you're looking at things like gold, if you're looking at things like, oil and that, but especially with Forex, and I love the indices, NASDAQ, the S&P 500 as well, they typically trade a bit cleaner because just the incredible amount of volume going through those. All right. So, even Bitcoin compared to those is really as a drop in the ocean. But what I love about crypto is the challenge, right? And the potential upside plus the volatility, all right? You know, you can really catch some big moves. How many accounts have you blown to date? Well, when I worked for a proprietary fund, I was trading real capital, right? So client capital when we were based out there. So we had a risk manager that would be on the desk with us as well. So you would have to basically get your trading ideas and that past them, and they would kind of either cap or give you more allocation of what the fund had to put on the trade, depending on how you were trading, what your statistics were. I don't really blow up accounts, in truth. You know, I know that's not what a lot of people like to hear. I'm actually a fairly risk-averse trader. What have I done? I've definitely been scammed in this industry a few times. I've definitely lost accounts, but typically kind of grinding them down. One of my biggest challenges actually came from, you know, dynamic risk control, learning to kind of add to positions, or when I was particularly hot in the markets and the systems were working well, to add more position size at those points rather than just having a flat lot across all of the different asset classes, which was a little bit trickier. Maureen, prefer crypto plus gold, silver, mostly just crypto, gold. Nice. Yeah, really clean to trade. But each has its little subtle nuance. What you have to realize with traditional markets is I can go on to trade, say, the NASDAQ, right? And as we're looking at the NASDAQ here, right, you'll see these shaded areas, right? The white areas in here are the equity cash open in the US, right? The gray areas represent you know, the off market, or not, it's Asia, London, right? That kind of goes to here, Australasia as well. So you can judge what's happening here. The other thing that makes this slightly different, if you go to RTH, which is our regular trading hours, and we pop our session breaks back on, right? So just to show each as a day, it actually eliminates, right? So it actually eliminates all the, you know, the off market hours, which is Asia and London. So what I can do is I can then dissect the playbook within here, right? And I'll show you guys how I do this with crypto as well. And then what I'm looking for here, if I'm looking for particular strength in an asset, I'm typically looking how it's traded the previous day and the days building up to that, which is what I'll show you on crypto as well. Slightly different approach to it. But what I know is that in the equity cash open, right? Let's say this, for example, Tuesday, 3rd of March, that this was the price action we got. Now, yes, I've obviously drawn that in previously, so we've reacted at a higher time frame level. Buyers have stepped into the market here and we've really failed to break down. Now what I want to see is if value is shifting higher, right? So what I can look to do is I can look to isolate the first 15 minutes of the day or so. And trade a system that's known as the ORB, or the opening range breakout. That's where we would do that. We would add something like a VWAP to this as well. All right, and the idea is that the higher to the low of the opening 15 minutes here, this makes our range. What we want to see, if we're playing strength, which we are from the previous day because we're trading above it, is we're looking for price to expand higher, and then we want to be buyers within this area and outside of this. All right, just to give you an example, but there's many different ways to trade, all different markets, but typically, you know, I haven't really found a one size kind of fits all approach, but the dynamics of how markets move aren't really, that there's subtle differences and there's nuance, but overall, you know, you're looking at this from a point of human psychology. My job is I can't fight institutions, right? Ultimately, you know, there's trillions of dollars that wash through the NASDAQ every day, billions potentially through cryptocurrency, right? So, you know, what can I do? Even with a position size of a few million, I'm not going to move a lot. Right. So what my job is, or the way that I see my job, is to identify where those market participants are active and then try and grab a slice of that action. They're trading these things on higher time frames. So as I look at this day, for example, right, we could be seeing it something like this. You know, you've got a big candle coming into here, which incorporates all of this trading, right? This here is a wick lower. We see the wick recovered back to within the body of, say, the daily candle, and then we've got a daily candle range to trade between. All right, just a slight example, but obviously we can match this between regular trading hours or electronic. We bring in the electronic trading hours, all of a sudden we've got all of this to factor in as well, right? So you can see what happened here in New York, quite a choppy session actually, but typically how we look to trade equity markets, or one of the best ways to trade equity markets, are trading the major expansions. All right, so if you look at this chart and you're looking, for example, at these, and I'll show you again how this applies to crypto, what I'm seeing here is a large downward move, and then I've got a range, right? As I've got the range, if I'm bullish, I want to be a buyer at the range lows, or breakouts and retests of the range highs, like we see here. If I'm bearish, I want to be a seller at the range highs and a seller at the breakout of the range lows. If we transport this across onto, say, Bitcoin or ETH, we'll take a look at BTC. Maureen, yeah, sure, we can absolutely cover that as well. Let me just add that down here. Levels. Let me just take a very quick look through the chat. Sorry, guys. Right, levels, we do that. Negative means short's aggressive. They barrel the longs to support and deviate to send it higher. Yeah, good explanation there, Hassan, in terms of that. A big part of how I trade is looking for absorption as well at these key levels, meaning that what we're looking for are, if we want to be, sellers of an asset here, and we've identified this pink box, by the way, just is a higher time frame, low volume node, which I'll show you. They're areas of the market that price tends to find out for reactions. Well, as we see price come into here, right, and we're coming into this, well, price ultimately is bullish at this point. Yeah, this is on the 5 minute. This is typically this, or the 15 is what I'm using to frame trades. So as I'm looking at price come into here, now the key thing is remembering that on the higher time frame I'm bearish. Right, so as much as this looks bullish at the moment, we're obviously kind of putting ourselves in the mindset of, okay, how do we actually want to trade this aligned with a high time frame bias, not getting caught up here with the noise. So price comes into a key level. A lot of trading is about patience, waiting for it to engage in your position. All right, so pink box is what we're looking at here. And as we're kind of looking at that, we can use things here like the CVD, right, which is this lower one, the upper one, as well as open interest here. Now, what we're seeing here is that price is kind of really coming in aggressively into this level. So if we mark a line at the high here where we see the first engagement, then what we want to do is mark another line, say like back here, looking at these highs, saying, okay, well, in this section here, what did price do? We saw a sell-off here, and then price really ground higher, yeah? So does the CVD agree with that, right? But actually, if we look at the CVD here, we can see quite clearly that this high, yeah, so this high here is actually flat, all right? Now, that's not a definite sign that something's going to happen, but all of a sudden we see open interest rising here. Again, not as much as we see on the chart. It means we've got new longs opening into this position, right? But it means the volume isn't really backing this up, yeah? So that just adds a little bit of confidence to show that buyers, are knocking on this door, but they can't get through it. And what we've got is we've got a situation where aggressive buyers are being absorbed by passive sellers, and this is then becomes a decent area that we can look to take a short trade. All right, I'll run through the system in detail in a moment as well. I just want to kind of go through some of the questions. We'll absolutely look at levels as well, Maureen. Yeah, Spaceman level B2C is an indicator. Yeah, really, really good. In fact, I think I've got it on my chart here. Right, and what you're doing is you can set it up on here. It can get you your key levels, high of day, low of day. You can get mid ranges, 4 hour candle high, 4 hour candle low, 4 hour mid, weekly highs, weekly lows, bits and pieces like that, monthly opens. But like anything, the key thing to do with these is you need a plan going into it, right? So let's just look at this as actually a pretty good example here, right? So we've got these two levels here. We'll kind of take a look at these in a moment, but this is the one we're interested in. This is actually just a range high, right? So we're going to keep this on the chart. Now, let's say we're bullish, right? And we've got this level here that could be daily open, I would imagine, right? So then we're moving through here and we're saying to ourselves, we want to see strength in the market. We've got a range high here, so we're not going to long into this, however attractive this up move looks. However, when price does this and we see that displacement above, what I typically want to do in those moments is I want to use volume. So I'm using a fixed range volume profile from the low to the high. Then I want to identify these areas, low volume nodes. All right. But you don't have to do this. You can see that the gaps are also present on the chart. Yeah. So you've got these inefficiencies in delivery, also known as fair value gaps. I like using volume just to kind of pin it down a little bit lower. And then I'm looking at this further down here and I'm saying, well, actually, we do have a low volume node down here, but I'd need to see quite a quick reaction tagging into this and then getting back above pretty quickly to long it, because I want to see these levels here acting as support. All right. So however you're drawing your key levels, the whole idea is you have a plan when you get to them. And one of the things that will crush most traders is the impatience of waiting for price to engage with those levels. All right. And we'll cover that in a minute. But whatever you're using to kind of ascertain those levels, I do really like Spaceman BTC, Trader XO as well. A guy I know on there in SC, they've got him and Trader Charlie, I think, have got a really good one, or XO levels, I think it is. And again, it's exactly the same way. They just plot them automatically for you. So let me just turn this off for a moment. Right, finish looking through the questions, guys, and then we'll get some levels together and take a look at what we've got. So, yeah, indicator, you mark levels from last month, or do they become irrelevant? No, again, it depends very much on what time frame you're trading, right? So, can you trade this on a? Yeah, absolutely. I am absolutely trading this on Hyro. In fact, I'm completely coming from the fund that I was at coming into Hyro, which, you know, I really do need to say a really big thank you to the team, because they were instrumental in me coming over here, right? You know, I've worked for a number of funds. I've been around this industry for long enough. You know, I've spoken at probably the biggest events in the world. I've trained multiple professional full-time traders. That's not to blow my horn, but that is really to have huge credit to HyroTrader, because of all of these guys. They blew me away. They really, really did. Amazing support, great payouts, really good system, first with the Bybit integration. It really is a really good place. What my real passion coming here is to really build out the academy, the education side, and also some other exciting things. I really want to build a world-class trading team here as well, like I had at my previous fund. And to do that, we want, to be dipping into our pool of talent, which is all of our, which is everybody that's using HyroTrader. All right, but I won't kind of go into that too much now. There'll be some exciting announcements that are a little bit out of my wheelhouse, right? I'm just here to do that. Oh, that's a really good question, Rohan. Prefer trading breakouts or waiting for pullbacks? Completely depends on the regime, which I'm going to be going through with you guys in a moment. Sarah, any giveaways on this stream? There is a referral link that you can use for me that will give you, I believe, 10% discount if you would like to. But in the future, there hopefully going to be some really, really cool giveaways and stuff that we're going to do on these shows a little bit more. All right. Anyway, before I bore you all to death with that, let me give you an example of my system, how I see the markets, how I look to take these trades intraday. Then we're going to go back and we're going to have a little look at some key levels as well. Now, remember, one of the key things with trading, is that, no matter what time frame we're on, the principles remain the same, because price is ultimately fractal. All right. So what we're looking for across any time frame is, where we want to get involved in the markets, whether you're trading pullbacks, whether you're trading breakouts, right? So let me give you a really good example of this. So I have quite a simple system for trading Bitcoin. All right. So let's take a look. We'll take a look at what we're doing with today's price action. I'm going to show you how we've made up this from the prior day as well, right? So I'm going to bring in something known as a session volume profile. You can get it on TradingView. Everything I'm going to show you guys is going to be on TradingView, right? At least to start. I'm not going to show you things like Bookmap, Sierra charts, all the other bits and pieces. They're expensive. They're brilliant tools and brilliant kit, but you can get most of this on TradingView now. People's criticism of TradingView, just to get out there ahead of it, is that for volume, it doesn't use tick data, all right? But I've always found it accurate enough to trade crypto with. All right, just so you've got full information. Now, I often start on a 15-minute or a 5-minute. I'm going to move to the 15 minutes so we can get a bit more data. All right. Now, I'm going to go to the SVP. All right. It's this session volume profile, and I'm going to put this on. Here we go. And the legends in the back for us have popped the discount code for you in the chat if anybody is interested. So as we look at this here, we can see quite clearly each day has a profile, and all this represents is the volume, the session volume from start to close of that particular day. For anybody else interested, these just mark out volatility sessions. If anybody studied ICT, he coins them as kill zones. Mine are slightly different in times, but they're attuned to when we have the highest volume and volatility being traded within each of the London and New York sessions, all right? Now, something that can really help when we're building a bias here is to turn off the candles. So you can just go up here to the chart, go to your little 3 dots and click hide. Now what we've got in front of us is hopefully quite clear. Now, if I show you this, the plan for this is I'm going to draw this box, right? It's purely the value area high to the value area low of the day, and the red line is the point of control, all right? Now, what I can see here is this day closed lower than this day. See how the value area high and low have shifted? Yeah, if we imagine that this was the box, we can see the box was here. Now the box is down here, right? And the POC, this is really important. The POC, the red line, has also shifted lower. So as we look at this here, I'm just going to draw this in red just so that we can see. Actually, my expectations from this day is looking bearish because we can see price, since we set the high here, we stayed inside this day, and then this day lower than this day. So we expect lower this day. So we were bearish this day, bearish this day. Now what we can see here is this day moves above. So now this day is closed above. Yeah, we're saying, okay, right, this day is closed above. We don't know that until the following day, obviously. So then I'm going to mark this. Oh, hang on. As bullish. But we need to also remember that, you know, this day here doesn't belong in this box. We have to wait for this to close. So this day comes across to here, right? So we're extracting, and an easy way to do this is to draw the box of this day, yeah, on its actual day, and then move it forward to the next day, and then move that forward there. What it allows us to do, it allows us to say, okay, well, if we actually had a bearish bias based on volume here, my rules are really simple, right? If price is trading within this, yeah, then I'm looking to short the pullbacks, right? Or if price starts to range, yeah, then I'm looking to either trade the breakout or a deviation of the range high. Okay. The only point at which I don't look for bullish trades is if price is displaced above this range and we're trending up, in which case I see that as a displacement away from value and where price can now start to look for higher prices, right? Then if we just do this and we move the price back on, yeah, we can see within this day, what did we do? We were planning to be bearish on this day, right? Price actually moves away, displaces above. Now it's starting to grind down. So can you see how all of a sudden I don't really have a clear plan for this? I'm saying to myself, well, if we were to remain within this range, right, if we remember our squiggles here, yeah, we're looking for structure. Or if we displaced outside of the range and look to trade down, that's when I can be aligned with the bias. If not, I need to see a large expansion higher, yeah, to show me that price is going to be involved, or I want to see price breaking down and trying to get back into this area of value, right? So on this day, we have a couple of choices. As we move in, right, we can see over here as price comes back in, price has expanded overnight, but we know that, you know, volume is telling us that there was a shift lower here. So we want to be cautious, all right? We can see that price is starting to draw back down. So as I look at this here, I'm saying to myself as we come in, I'm going to put this little function on as well, which is a free indicator called CM time-based lines, right? I typically look to trade the crypto market from about midday. Okay, so that's what the blue line is there. Because this is a weekend, it doesn't show, all right? But it's actually here. So let me just put it on the screen for you. So this is the point at which I'm becoming interested. Do I want to long this rip? Absolutely not. I have no interest in longing this rip at all. Why? Because I'm bearish and I can see that price is, first of all, delivering bearish. My job is to identify key areas on this chart that I want to be short from. And I want to be short from any origin of a large move lower, a displacement move. That means a move that's leaving gapping, all right? Because then as we draw back into this, we can look for setups on lower time frames to trade because we've got our target, which is this range. Now, remember, if we'd done this and set a higher high and higher low, I'm not trying to short this, right? I'm looking to play the strength and the fact that this has left the range behind. The fact that we had this expansion and price is just grinding lower, Just gives me even more confirmation that we're looking to short this back down into the area of value. The reason that this works, and the reason it works across multiple markets or every market, is because volume is telling us what actually transpired throughout that day. All right. Now, what happens when we get a reversal like we get on this day here is we can see this is this day's range. So if we pop our SVP on again, we can see it's purely the high and low, of this day's trading. So now we're bullish. Well, what does that mean? Just remember that we have ranges here, So as we step back into here, I just want to see price stepping back into the range, right? And then we can look to move higher. So for the person that asked about breakouts, in terms of, I'm not sure if you're interested in terms of how I trade them or whether I think they're better or worse. Typically, breakouts have a higher failure rate because price mean reverts around about 68 to 70% of the time, meaning that if you're in a range, the chances that you continue to oscillate within that range are higher than you breaking out of it. In fact, what we often see and what we look for are deviations, right? So that's price moving outside of the range as we get here and here, right? This is a little bit before I would trade, but then I'm looking for that expansion back within the range, all right? And then I want to see a shift in structure and I want to see an inefficiency in the move, right? That's because it tells me that buyers are stepping in, Now, for every buyer, there needs to be a seller, but what we're seeing here is clear aggression. Now, one of the things I want to do is then look left. And what I'm saying is, well, actually, we can see that we're kind of reacting here at this previous range high. What other reason could I have to be bullish? Well, if we're talking about origins of moves, we can see that buyers clearly stepped in here. If we now want to move to the left and we want to see why that is, we can just compress the chart up and say, do we have any form? And this is a good tip, by the way, for anybody that's looking for support and resistance, is if you move the chart and you look for these really key spikes, into levels, and then you start to notice that you're getting reactions on both sides of those. You don't have to dissect this with a perfect line, right? You can just take those extremes across the chart. Right, let's just delete these. Because if you're looking for key levels, what you want to ask yourself is how violent has that reaction been when you've got to that level, right? So if we look at this now as we're looking back, and yes, we have the power of hindsight, very, very strong move through this, zero respect for that level. When we return here, lots of respect for that level. If we were to draw volume on this displacement leg lower, we would see these areas of low volume being engaged with, all right? So now we're below this. What happens the next time we get to it? Another sharp move, okay? Then we see price move higher. Look at the momentum, price moving through aggressively. Then we see it act as support. Then what happens? We lose the level. And again, we displace through it, right? And what I mean by displacement is we're leaving these inefficiencies, right? We're leaving these gaps. These gaps are often rebalanced, all right? As price moves back into them, it then allows other sellers or the same sellers to add to that position to move price lower. All right, so then as I'm looking at that and kind of lining that up with my thought process, and I'm saying, okay, support here, displacement, resistance. This gets a little bit messy, but I don't mind. Again, you have to expect that, especially with any kind of highly volatile asset like Bitcoin, right, or any cryptocurrency. Then what we get here is really, really clean because we've already got our plan for the day. We're bullish. As long as we hold this range, and do not aggressively displace, as long as we don't aggressively displace lower, then we're holding this because we're looking for these to be deviations, right? We're looking for these to trap traders to the downside so that we can look for those explosive moves higher. If we then bring in our CVD and we bring in our open interest, we can see quite clearly here, if we mark this low to this low here, you do that in bright green, and get rid of these for a minute. Then if we're looking at the charts here, right, what are we looking for here? Well, this is flat, on the CVD, there to there. It's marginally down, right, marginally. But again, we can see nothing like this one is here, Then if we look for the same low here, we can see the open interest disagrees quite considerably here. Yeah, so we're seeing these positions come in. Basically, you're looking for what the price action is telling you versus what volume and open interest is telling us. And this is giving us an indication here that a drive back into this range, if we consider the price spends the majority of its life in a range and the ranges oscillate from one side to the other, that even taking a position as high as this, we can see we've closed above. Yeah, we've taken out the origin of this recent move lower. Yeah, so they're the up close candles here that led to the last sweep of liquidity. Okay, meaning that if those same sellers that are in control of the market here want to retain that control, we don't expect to see price close above it. That's why retests of these kind of areas, when we align it with confluence, often give us good trading opportunities. Right, let me just get rid of some of this. Right, so I'm going to go on in a moment and just build out on this principle of how we draw these levels, right? But the first thing I want to do, just in case we get any action today, is just take a look and overlay those same principles onto what's happening with price action today, okay? Oh, actually, sorry, let me just take a little look at this. Away from a few minutes, AFAC, yeah, no problem. It's all recorded, my friend. But if you have any questions, you can always reach out to me through the Discord. But I'm going to run through the system again now, okay, on the intraday, and then we're going to go back and we're going to look at those levels across different time frames. Have a quick sip of water. Right, so as we did with this day, we want to now establish what playbook is dictated to us from yesterday's volume. All right. So once again, let me just, we can get rid of these for a moment. The 9th, wasn't it? So we got a nice clean chart, right? So let's turn the price off, just so that we can really kind of absorb ourselves in the movement of volume. Yeah, so we can see since price drove down into this level, and if you really kind of zoom out here, right, so very often, if you put these on, you won't see as many of them now. If we extend the POC to the right, you can see with these naked points of control, when they're engaged with like here, they're really powerful. So we always want to check if we've got any of those in play. We're not interested about today's at the moment because we really want to see the day close out before we use it, all right? But what we can see here is price has kind of come out of this move. It's moved higher. We've come off of a higher low, higher high. Now it looks quite likely that we're starting to set a higher low here. And we're in the process of price shifting. What made yesterday a little bit tricky to trade was the fact that we were delivering lower. Yeah, so this profile here is lower than this, as is the POC. So we expect to shift lower the next day, which we get here. This again, POC is lower and the range close is lower. So we expect to shift lower again. Now we had exactly the same here. Yeah. The range shifts lower, as does the POC. So if anybody remembers from a moment ago, what I explained is the invalidation of this is on this day, we take the profile. Yeah. Because we've already got this information. Yeah, we've seen price move lower here. This was Sunday. We're now going to extrapolate that across onto Monday. And now remember, we're bearish if we deviate the range, come back in and short, or if we move high and break down aggressively, anywhere in the range, as long as we can identify key area to short, or if we break down below the range. The point at which we do not look to short this is if by the time we're involved in the markets, we have bullish structure. All right, in which case we're then looking to trade off of returns to either low volume nodes or key support resistance flips. All right, if we pop price back on, yeah, we can see that price came back down into the range here. That's why yesterday, for example, I got stopped out my first trade, which was a short, and then made it back moving long, right? Because we had that reaction outside of the range. We came in, we took this range high. Let me just turn these off for a moment. Yeah, we dipped back down into the range, and then I was looking to short a retest of this low volume node here, right? The great thing about this, and people are so scared about losing trades, and it did used to bother me when I first started out, and especially when I used to start trade live for a living. I once traded a token 2049 in front of tens of thousands of people on the live stage, And of course it's nerve-wracking, right? And you don't want to step up in your first trade and look like an idiot. And I stepped straight up on stage and lost my first trade. Anyway, there's a lesson in this, because by losing this trade here, yeah, remember again that I'm looking for these areas of low volume. I'm just going to mark the highest one or the highest ones that I was interested in trading here, right? Because I'm looking for this to be a deviation in price to sell off. Now, what happens here? What a great indication price then gives you, yeah? So fail with the short here, then price closes above this area, yeah, of low volume. Again, strength, strength, strength. If you zoom out, you can see actually price has just been delivering bullish all day. All right. So now you can reconsider your plan. We're expanding away from this range. We've started to go away. We've had our invalidation. Now, I'm just going to get rid of that for a moment, because now as I see it, I've got the volume marked. As we move through this, as soon as we close above it, this goes from resistance to support, right? And then gives me an opportunity to be a buyer in here. The other place, all right, for the long trade that was taken, which was here, is because we now have this displacement away from the range. Yeah, again, there's no displacement lower here. There's a small displacement here, but there's no aggressive, sharp move down. Yeah, what we want to see for things like this are these V-shaped moves. Yeah, so something like this, quick up, quick down, it barely consolidates and just heads back down. The chances are that that momentum is taking the market lower. What we're looking for here is for price to come up, grind down a little bit, healthy price action. We want to take our volume from the low to the high, right? And then I'm marking out these key areas. Right, you can see we didn't come down into these ones, but we held this one here beautifully. And then on the low time frame, I'm just looking for exactly the same as I'd be looking for here. I want to see a low formed in this case. I want to see an aggressive sweep of that. Then when I want to see an expansion higher, and I'm looking to trade that area of low volume to push it up higher. If that's particularly high, I will often pyramid into a position, yeah, meaning that I will look to add some, I'll open maybe 60% of the position here and then save the remaining 40% if we drive lower into it, which improves my risk to reward. Depends again on the momentum of the market. But that's just to give you the concept of what we're looking for here and why this was a pretty tricky day. So overlaying the same things for today, if we get our SVP set up, what have we got? We've expanded above this day. We've created this new range here. This is where traders were expecting there to be, were considered price fair value, right? So look at where price is reacting now. Here's our range, which is just the prior day here and the POC. Now what we're doing is, again, moving that into this day. I don't typically do this. I do it for example purposes or if I'm teaching, but typically I will just have a line that comes across. But I think this helps give a real visual reference. So we know we're bullish. That's why the box is green, because we are creating higher value. Price is being offered at higher prices. Yeah, don't overthink it. Think about auction market theory, right? Price is being offered at higher prices and people are still buying at higher prices. Therefore, there is demand to drive this higher. So as we look at this, we're going to take that off now. We know we're bullish. Where are we looking for reactions? What did we say, right? Range high here. We want to see this hold. Now, actually, trading this here on the 15-minute, on the 5-minute, we can see that we've got this beautiful reaction here. So what we can do now is we can use volume and we can start to get an idea of where we might get a pullback, right, for the market to make it more efficient, because we're seeing this inefficient move higher. Now, we have shifted structure here as well, which I like. Right, so we've moved higher. We've had our MSS, that market structure shift. All right, and we've got our areas of volume. So for me now, I'm looking for the clear and obvious ones here. Like, I really like that, yeah. If I'm looking for a pullback here, right, then I do want to see it come a little bit deeper if I can, ideally towards at least the 50%, yeah. Max, trading support resistance flips the last 5 years. Yeah, I mean, absolutely, mate. Whatever works for you. I've seen people make millions in this market trading lunar cycles. Like, I think, honestly, the thing that undoes most traders is flipping between different systems all the time. I think what you want to do is you want to work incredibly hard within a niche to master everything you can about that. And then you want to build out your broader knowledge outside of it. To everybody that I've coached over the years, and this was taught to me by my mentors as well, which is you should have two sides of you, which is the trader. The trader ultimately is you're there to pay your bills, yeah, or you're there to earn a bit of extra money on the side. But ultimately, you could have the ugliest trading system in the world that's the most boring thing. If it pays you consistently, you trade that, and that's how you earn your money. Then if you see something shiny and new, you can step in and say, oh, okay, I saw this really cool thing the other day, actually, to do with whatever, moving averages, to do with volume spread analysis. Then you put your student hat back on and you test and go mad on the back testing for that and journal the hell out of it before you ever dream of bringing it to a live trading system, right? Otherwise, you'll just end up going around in circles. So yeah, I really respect that. I mean, support resistance is obviously a really, really key part for how we trade. And as I'm looking at this here, this is the next part I'm actually coming on to. What else made this a really good area to take a trade from? Yeah. So let's look again at the analogy we just put in terms of finding those, those violent, spiky highs and lows. I have a terrible analogy that I use with students that they laugh at my terrible analogies because I mostly make them up until the good ones stick, which is about hot water, right? So we've got two buckets of water, all right? Bucket one, bucket two. Right, now you don't know this, you don't know which one, but in one of the buckets, the water is boiling, right? In one of the other buckets, the water's really tepid, all right? Meaning that, it's pretty cool. You can go in there pretty easily, all right? Now, what you've got is you've got a shiny gold coin at the bottom of both, all right? Now, one of those buckets has got hot water in it, right? So you're going to have to put your hand in. What happens is you put your hand in the scalding hot water and you have to pull it out really quickly. You get this V-shaped aggressive response, right? However, if the water's not really that hot, you're like, it's not that hot really. I can just, you can make your way down and you can grab the coin, all right? So when you're looking for support and resistance, or you're looking for any reaction in the market, which is another reason I really like this, is looking for the violence. Yeah, hot water, had to pull your hand out quickly. Hot water, had to pull your hand out quickly. Hot water, pulled your hand back a little bit, right? But then you really dived into the bucket. So in a very arbitrary way, if we align these and we say, okay, you don't have to be the most accurate thing in the world. I always do try and anchor to a wick or a body when I do this, but I'm going to look at the key wicks here, and I just want to make sure that I've got all of those. Right. And move it back to our nice grey color. Now, what do we have, right? We have a plan that involves support and resistance. The market cannot push above that, right? There was a catalyst during the night in Asia that pushed prices higher. Price then came back down to this area, retested it and moved away. Now, what happens is there's lots of people that will short this level because it's proven here, here, and here, right? Or not here when you're coming back into this, but here and here, that shorts are being paid. So if you've opened a short position here and you've held through all this horrible drawdown, price then comes back towards your entry, you're allowing two different participants to be active here. One, the short seller, that's offside and will thank his lucky stars or her lucky stars for the chance to get out of this price, to get out of this trade at minimal loss and potentially the chance to flip long. And you've also got the people that catalyze the moves from the lows as price returns, allows them to add some more to that position and drive the market higher. All right. Now we can see at the moment we're getting a really, really aggressive reaction here from price. We could see a little bit of a shallower kind of pullback in here. Unfortunately, it doesn't look like we're going to kind of get the setup live, but we'll continue to monitor this throughout the day. Let me just clean this up first of all. Let's just go and take a look at a couple of others as well. See what we've got in terms of the outliers. Where did we have with hype this morning? Was lagging a little bit, I think. Yeah, so we've seen a really similar thing now. So we've just started to see this reaction here from hype, and we've taken this internal high here, right? So we have some form of structure. So if we zoom ourselves back out again, we want to follow the same process. Bottle of water. You lot have been listening to Jakob, haven't you? QBS. Or maybe the British accent is that famous for that level of terrible pronunciation. Right, so as we can see here, we've got a slightly different dynamic, right? We're within the area of value here, which is quite nice. And look how far we've moved above this one, yeah? Huge displacement higher. Again, remember, on this day, our trading range was this. And just imagine that that's red. So by the time we get into the charts, and we're saying, okay, volume is looking like we're moving lower, prices delivering lower, people are happy to sell at lower prices. Then we see these huge expansions. This is where we move. So somebody asked me this earlier in terms of preferring breakout trades or not. What I would do is, if I wanted to be a buyer here, which I would, right, then I see this expansion moving away. I'm going to take my volume profile here from low to high and identify the key areas that I want to be a buyer. So I'll just put this one in, for example. Now, if I see price moving its way lower, right, and it just simply can't move any lower, my expectation is that then buyers have stepped in around here, okay? If that is the case, let me just turn these off for a second so it doesn't get confusing. If that is the case, then one of two things is going to happen. We're either going to range and then we're going to break out of that range, moving higher, which is a very aggressive move, or yeah, we're going to drop lower to retest this, but either we do it quickly, so we don't form this range, for example, like this is a good example here. Coming to these lows, yeah, there's no real range created here. Prices comes in and bounces pretty quickly, all right? However, this one's slightly different, yeah? Price comes up, kind of creates this range in here, and you see you don't get that breakout at all. And actually price then just sells off, so it helps keep you out of the trade. Here, we can see we've created this range, and with a range, I want to be a buyer at the low, or I want to trade the breakout. Now, how I've found over the years to successfully trade breakouts is looking for the initial move, so the first impulse move above the range, and you don't have to draw crappy little ranges like that either, right? We can just take our fixed range volume profile again. We look for where the consolidation starts, draw it across. We can see we've got our value area low and high. Here's a really nice breakout. You can either trade the return to that. You can see you tag the POC perfectly here. And again, it depends on what you're comfortable with. I would either want to see price flush the lows again. Yeah, so we get that nice setup, remember, aggressive, and then we can look to trade higher. Or if price doesn't do that, sets a higher low and shows me strength, I want to be a buyer here. All right, close above this, retest of the wick high, that's where the liquidity was resting for people that tried to move this back. We've now dominated that by closing above it, and we can take a position here to trade it higher. Obviously, all has to be aligned with risk to reward. With this trade, you can either go under the low or you can secure your risk underneath the range itself, okay? But let's just take a very quick look at where hype is in the moment, because we can see this thing really starting to fly. So this was our range, all right, that we were looking at in here. We've had our key move lower. And again, if we're looking at ranges, what did we get? We got the expansion here. Yeah, here's the range. We see we come into the lows, buyers at the lows, but we deviate the high and things break down. Now, if we were looking to trade this as a range breakout, yeah, here's our initial move candle. Yeah, this is the thrust candle that broke out. So just as we did on the last one, mark the wick high to low, no cherry picking. Do we close above it? We do not. All right, so sometimes that can be a really good buffer when you're trying to trade breakouts, all right? Now we can see price is trying to get back in this range, and we could be looking at this being the main consolidation, this being the trap, and then this here being the expansion higher. All right, power of three, AMD, whatever you kind of see this as, you're looking at range plays, trapped traders, price looking to expand. If we now bring in the CVD, yeah, we can see actually CVD's comfortably set a lower low here. There's a bit of a divergence going on between here and here. All right, ultimately the volume is selling off here. Yeah, we can see that in the cumulative volume, and we don't really have any divergence between these at the moment, so we don't have any extra confluence from that in terms of looking at larger players coming into the market. So if we move ourselves back to Bitcoin now, yeah, we haven't got the pullback on Bitcoin, unfortunately. This is showing a lot of strength that can sometimes put a little bit of pressure onto the altcoins as well, as we do know. All right, now if we look across as expected, yeah, Remember, white line, cash open, equity markets, what happens? How often we see this move to the offside to engage liquidity here, and then the markets start to rip. What are we seeing with crude oil today? Yeah, our little risk off signal, that's trending lower. Do we have the VIX coming down? We do. So all of the catalysts that we were looking at before the market are aligned to tell us that the market has room to breathe higher from a risk perspective. And that's what we're looking to ascertain on Bitcoin, obviously. ETH, which looks remarkably like Bitcoin at the moment as well. We've got obviously Solana, Hype, AVAX as well. I love to trade AVAX. It's such a clean asset to trade. AMD, yeah, and accumulation, manipulation, distribution, right? Also known as like the power of three. We just used to call them range sweeps, right? So like I say, if you look at things like the NASDAQ and stuff like that, you can see some really, really, really clean price action. So these principles were just in place on Solana. I like trading Sol, and Sol had a really kind of good setup yesterday, as we saw with this coming back down into this area of, into the range, into this area of demand, and then we were moving up from there. Right, so let's take a look at this. Right, okay, so I know we haven't got that much time left, guys, so I just want to open this up for any questions that you might have at the moment in terms of Bitcoin. Yeah, just to kind of look at this one before we shut up shop. The plan's already laid out, right? We're having a mad expansion at the moment, but it doesn't mean we're not going to get a nice pullback and a potential trade. So how can we trade that? Again, we've got the areas of low volume that we want to tag. The other thing I would say with something like this is, we're breaking out now above high of day here. So I really do want to see if this area holds. And if, for example, we were to form any kind of range, it moves to the offside, can give us a really nice opportunity to get involved in there. Max, really, really good question. You don't, right? You can use CVD divergences, you can use bits like that, but really the key thing is trying to overlay the key catalysts that you want to see, right? So for example, like with this one, now if you're just trying to trade any old sweep, first of all, if you've got to really zoom in, now we've got a long bias, and imagine we were trading this since London, right? And London's had this big move higher. And we're saying to ourselves, right, if we really zoom in, or there's a tiny low here, maybe that sweeps enough, maybe that sweeps enough, maybe that sweeps enough. No. The first point I would consider looking at anything here is this. And let me tell you why, right? First of all, I want to see, ideally, I want to see a raid. Yeah. So if you're looking at these here, you can see previous lows, that have been swept. And we also have a really nice, clear local low here, right? So we've swept that low. The next key thing for me is I want to see a move above the high that led to the sweep of the low. And within that move, I want to see gaps. I ideally want to see a fast, aggressive move higher, leaving inefficiencies that then allow me an area to target. All right. So if you're looking to trade sweeps, if you go through this, for example, whether you're bullish or bearish, if you end up looking at the very best ones, you've often got a point of confluence. Even though this wasn't the cleanest, right? How do we know not to take this sweep, right? This one ends up being really nice, even though we don't get that initial kind of move here. But if you look to the left, right, something you want to find is you want to either be sweeping out a key low or looking for a consolidation that led to a large move higher, or lower, right? I call them origins, right? So if you look at origins, you'll typically find that price as it moves, let me do this in a 15-minute as well, so you get a bit more data in. Right, the areas that control price, do so from both ways. This move down here, for example, that led to this large expansion, let's just use two examples here. We're going to use this small consolidation down here, right? And then we're going to use this down move before we saw this large expansion, all right? And even this in here. If you've got them clustered close together, I always favor the lower in this case, all right? So if this is where the buyers were present because they led to the market moving more aggressively higher here, if we want to be buyers in here, I want to see a low created, swept, and then an expansion, right? So an aggressive move. So what do we get in here? Not really kind of getting back above this area at any point, are we? What we do get, however, is an aggressive move lower, a retest of this level, and then price typically hunts out these origins. Yeah. Then what we're doing is we're monitoring here within the origin, and we're saying, can price displace above it? Yeah, if the buyers are really here, you want to see that aggressive move higher. Once again, price can't. See how it gets stuck below it? We sell off. Eventually, we come back to this area again. At this point, you would treat it a lot more as a kind of area of support and resistance. And you can see then what happens when you do really displace. Yeah, meaning these high energy, high momentum moves. So whenever you're looking for one of those sweeps, my recommendation would be to look left and see the area that price is reacting at and ask yourself, were the buyers prominent here before? Were they in control? Or, yeah, let's get rid of these for a moment. The other thing is asking yourself, were the sellers in control? Like here, yeah, the up move before price really breaks down lower. Yeah. And then when you displace above these, look, price trying to get back down, trying to get back down. Why can't it get back down here? These sellers were aggressively in control of the market here. Market ripped lower. Now they've got to ask themselves a question. If they're offside here, if they're in drawdown, they can get out of their position if you revisit this area around their entry. They can also cover or decide to hedge and go long. And it's also going to trigger breakout traders, other traders that are looking for momentum as well. So the idea is to always try and align ourselves with either who's in pain or the main aggressive flow that we're seeing in the market. All right, if we go back to the 5 minute here, we can now see price testing into this area of interest. So I would want to see some form of consolidation here. In an ideal world, I'd like to see a deeper move into this and then a little 1 minute setup that, again, I would look for, in this case, a low to be swept, sweep of that low, right? And then as we break above that high that set the low, I'm then looking for areas of low volume, all right, to take an entry because I've got defined risk. And obviously I want to make sure that my target is ideally at least 2R away, which gives me a little bit of breathing room. All right, guys. So one very quick thing, because somebody did ask this, and I just want to show this very quickly on a higher time frame before we go. Deep apologies to the technical team that are in the background, who are absolute wizards and very supportive and kind. And I know I'm keeping them there too long, but just to kind of give you guys some context over this as well, if you are trading higher time frames, I know we had a couple of questions about this. If I'm, say, using this on a daily, what I will typically do is I will go to a 12-month. Right. Now I'm looking at this on a 12-month. Again, this was a point of expansion. This is an area here, and there's a lot of people kind of targeting in and around the mid 40s for Bitcoin here. This was the consolidation here before we moved higher. But for me, price at the moment is, you know, on a yearly scale, which again, we need to take with a pinch of salt, as we would say, is within a bullish inefficiency here. We can see higher, 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 low, potentially coming back in here to find more buyers. All right. So we want to keep that in mind. So then I'm going to go to the 3-month. And I'm asking myself the same question. Am I really bearish on the 3-month here? Like, no. We've got this area here. We've got this key area of what was resistance through here. Yeah, closed above it. This whole thing's been support. And now we're back down at this area, right? Gives you a good position to target from. Then I'm going to go to the monthly and see where we are here. Now here, I'm looking a lot at lows as well, right? So for example, if you look at this low, what have we done? Closed below it. So drawbacks to here can give opportunities to short. If we look at it in contrast, when we look at this high, what did we get here? Again, you know, not contrast, sorry, but just to show the other way, a big expansion. You don't want to be a buyer at the top of these. You want to wait for price to come back down, ideally targeting one of these inefficiencies. So as I'm looking at that, what I can establish here is I have got a very clear and obvious support and resistance area, right? So yes, I've got this consolidation, but again, look, sharp rejection, consolidation here, but there was definitely price getting some pushback. You know, this was several months, for example. So I can just take a box out here. And if I want to include all of those, I can do something like this. All right. So this now is a retest here of this level of support. Now, I don't necessarily want it to be that big. And if I'm going to look here at recency, something I am going to note is if I do this, resistance, turned support. We're now back underneath this, right? So all of a sudden, if we can start closing back above it, we can look again for buyers to take control of the market. Moving this onto a weekly and making it just a little bit more granular, we can see how that really kind of holds sway there. Yeah. Now, yes, we do have these back here. So actually on this one, thanks, Hamza. You could argue as well that you're still within this level, right? If it's not clear, then just leave it. And also don't be afraid to just move down time frames and say to yourself, well, okay, if you're looking through here, you know, this for me, if you can't really see, you've got clearly defined highs in here, we can see the rejections. But if you're looking at this and it just looks choppy and sideways, then find the start of that consolidation across to here. You've then got your range, all right? And I wouldn't really be looking to actively be short here. Yeah, I think as we can see, this is where prices come in, and actually at the point of control is where it perfectly found support. So now I'm looking at this, I'm saying, well, all right, where's the key resistance here? Is this area, right? Let's just get rid of these for a moment. And if I'm looking at this being key resistance here, then on a daily scale, I'm saying, okay, we've dropped down into this range. This is where we start to consolidate. This is where price currently is. We had a deviation here. Price stepped back in the range, took the range low. We've now come back up here, right? So what I want to see here is where this failed. And again, we can use our rule of the wicks. Yeah, we can bring that across to here and say, okay, no problem. Daily close above this, then as long as we hold this area here, this is for buying. All right. If you really want to get nailed on with levels, the biggest thing that I can suggest is really zooming out, really compress the chart and just look for those super aggressive, yeah, spikes up and then spikes down. So for example, before you even refine it, we could look at that area here. Why? Resistance, 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 strong move above, support, support, kind of support. But then you see here, that key displacement lower, price comes back for the retest and then sells off. Okay, awesome. Well, look, guys, I hope you have enjoyed it. Just a little introduction to me, how I kind of see the markets. I will be sharing a lot more of this content moving forward. I'll be running live shows as well to cover education. You can reach out if you've got any issues or questions at all, you know, to me, or any questions about the strategy. Our real mission here at HyroTrader is to develop the next level of exceptional crypto traders. And with hard work, dedication, and just, you know, I know people say that a lot, right? But you really do need to immerse yourself in learning, all right? And then when you've got the skills for that, I've seen some really great people in there, by the way, sharing setups, ideas, you know, see a lot of stuff in there from Hamza as well. We've got some brilliant people in there. Arun, I think, is still learning everybody's name, that are absolutely crushing it. You know, so reach out, ask these people questions as well about what they're doing, but ultimately just concentrate on what you're doing. Don't let the losses affect you. Just, if you're taking losses, review the data. Maybe it's something to do with your stop placement. Maybe it's something to do with your entry technique. Ultimately, these things are things you can share with us as well. We'll take a look for you and try and help you across the line. All right, guys, thank you so much for tuning in today. Really appreciate the warm welcome that I've had so far in my time here with all of you legends. And I hope you will all be funded in the very near future. And I'm sure you all can be. Again, the Discord is there. The chat is there. Be active. If you've got questions, reach out. We'll do our absolute utmost for you. And apart from that, I'll see you guys back on the live show next week. Okay? Take care, everyone.